Let's start, why don't we, Michael Arone, with the economic data out today. A little bit of squishiness on consumer sentiment, but generally the data have been pretty good, indicating a soft landing, right?
I would overall say that the soft landing outcome remains intact. The economy's cooling, but not in recession. Inflation continues to be on the right trajectory. Earnings are going to be great. Wells Fargo and JP Morgan got us off to a good start. Consumers in good shape. So I think all in all, the soft landing outcome is the most probable, and that's pretty constructive for the stock market.
Michael Santoli, what is the Dow seeing today to make it go up 350 points?
Yeah, Tyler, I think sometimes, the context is the catalyst, which is every time we get one of these tests, whether it's CPI, PPI, weekly jobless claims, and we kind of run it against our premise, which is, I think, that the market is priced for something like a benign soft landing. If we clear the test, I think it does release to the upside. I don't think that there's a lot of fixating on specific news. I think the bond market had its move mostly in response to payroll data a week ago, and so it has not really given incremental reason to worry at this point. The S&P at a new high of 5,800 or so. It's slowing down. This is not a huge burst higher for the week, but it's definitely grinding in the right direction and led by mostly cyclical components.
David, Konrad, what is the macro message from the big banks this earnings season? The shares seem to be telling us the coast is clear.
Yeah, I think with the economic data that everyone has spoken about, I think people are trying to look through some near-term headwinds and see the improving NII perhaps going into 2026. That probably wasn't a luxury we had 3 weeks ago. And so, I thought with this quarter's results, NII this quarter came in a little bit better than expected for JP Morgan, but did guide down largely the first half of next year on NII relative to consensus a little bit, but does expect that to kind of accelerate and improve in the back half of 25. And so that's where people are really focused on, is looking through, rather benign credit results here this quarter. With that a little bit off the table, you can be a little more patient with earnings.
David, let me ask you a kind of curious question. As you survey the big banks that you follow, let's say you had to have one bank that would be your core holding, the one that it's going to be your long-term go-to, and another of the big banks that would be your speculative one, the one where you think, okay, I'm swinging for the fences here. I may swing and miss, but if I hit, I'm going to really hit it out of the park. What would those two banks be?
Well, JP Morgan is always the long-term go-to. So you look at that stock, and it always looks a little bit expensive near-term, but if you look at it over 5 years, it typically does reward you well, and it's really the best well-run bank out there with a lot of excess capital. In terms of sticking with today, Wells Fargo has been an under-earning franchise. It's well documented with a lot of regulatory risk. They have the asset cap, and so that one, the bull case thesis on that would be that the asset cap was lifted sometime next year. They're close to trough NII as we move through the first half of next year. And an under-earning franchise, which could, at 1.4, 1.5 of tangible book, could be, much more valued out 2 years.
Interesting.